Can customers recover losses from investments made in corporate or government bonds if they feel they were the victims of fraud? Joining us now with some answers, our investor advocate Ted David with a guest. Ted?
Bill, thanks very much.
The answer here is yes and no. There are several factors to consider in determining whether or not you have a valid claim. Joining me is securities attorney and former broker John Lawrence Allen, author of Investor Beware, How to Protect Your Money from Wall Street's Dirty Tricks. He joins us from a Midtown bureau. John, good to see you.
Hi, Ted. Nice to be with you again.
Look, all bonds, like stocks, are securities, so what special rules do brokers have to follow here?
Well, it isn't necessarily a special rule. It's the same rules that apply to securities. Brokers must make recommendations that are suitable. And the Rule 405 of the New York Stock Exchange and 23101 of the NASD Code of Fair Practice are the Bibles, or the basic rules upon which all recommendations must be based. They have to be suitable in keeping with the goals, the objectives, the risk tolerance, and importantly for bonds, the time horizon of the investor.
You say brokers must help clients make an informed decision. How are they supposed to do that?
Well, for instance, a broker should certainly at the very least discuss with the client what their time horizon is. Obviously, bonds which have a maturity date, that is, they come due, would be based upon the needs of the investor. If their time horizon is a 5-year time horizon and the broker doesn't tell the investor that they're investing in 20-year bonds, then the length of that bond would add to the volatility with regard to principal, and there could be a possibility of making an unsuitable recommendation. In other words, a recommendation that's not in keeping with the goals of that investor.
Now, clearly, pardon me, nobody would want to recommend a stock that's a dog. On the other hand, there are bonds and there are different ratings on bonds. Some are better than others, and maybe you're into high yield and you don't mind buying a dog. What is the responsibility of the broker to tell you about ratings?
Well, there's two responsibilities. First of all, the broker should at the very least tell you whether you're buying an investment grade, a BAA rated bond, or BBB for S&P. In other words, any bond that would be below a BBB rating for S&P would be considered junk bond, below investment grade ratings. Obviously, as you go higher on the investment scale up to AAA bonds, the credit rating of that bond increases. And there is a relationship between the credit rating that might go into default. And if a bond goes into default, of course, then you're going to have investors not only not receiving the coupons, the income that they were receiving, the income portion of the bond,
right,
but there could be a principal default which could cause substantial losses. With regard to suitability, if you go in and tell a broker you're looking to make conservative investments and the broker puts you into a high-yield junk bond fund, that is, in a non-investment grade bond or bond fund, that certainly would not be in keeping with what your goals and objectives are.
Now, you also talk about concentration versus diversification. What do we mean here?
Just like in the stock market, you don't want to put all your eggs in one basket. And if you, as an example, many investors think that by investing in a bond fund, they're getting broad-based diversification because there are many different bonds in that bond fund. But it depends what the asset makeup of the bond fund is. As an example, some investors have been told if you invest in a junk bond fund, you're getting diversification because there's hundreds of different junk bonds in that fund. That's no different than going to Las Vegas, playing roulette, and instead of playing on one roulette table, you play on 50 roulette tables thinking that's going to increase your odds.
Right, yeah.
You need to get broad-based diversification in bonds as well, whether it's corporates, governments, a AAA bond,
John,
municipal.
I'm out of time, but let's do the payoff here. If you feel you've stockbroker fraud, we know what to do. What if we think we've been a victim of bond broker fraud?
If you're a victim of bond broker fraud, you can certainly file an arbitration claim with the National Association of Security Dealers Office of Dispute Resolution. There are other forums available depending on where you bought the bonds. If it's a municipal bond, if it's a corporate bond. You should seek legal advice, however, because these areas are complex. And don't be afraid to take a look at the web pages. The NASD has a web page you can look at that can give you information on how to proceed with an arbitration claim.
All right. Thanks very much. Good to see you as always, sir.
And nice to be back, and have a good afternoon.
All right. Thanks to securities attorney and former broker John Lawrence Allen in Midtown.